Why did the price of cryptos crash? Since the start of this year, the prices of various cryptocurrencies were increasing constantly. Bitcoin, which happens to be the largest cryptocurrency in the world, reached a value of more than $60,000 during this time. Moreover, Dogecoin, a meme cryptocurrency that started as a joke, reached a value of more than 72 cents. Here it is worth noting that the experts previously predicted that Dogecoin would never be able to hit a value of even 10 cents. However, the prices of cryptocurrencies crashed back in June of this year, and the value of Bitcoin briefly dropped below $30,000. Now the question is, what happened? Why did Bitcoin fall below $30,000? Hi guys, welcome back to my YouTube channel, and in today's video, I'm gonna tell you why the price of crypto crashed. However, before we go any further, make sure you subscribe to this channel and don't forget to hit that bell icon so you never miss any updates. Now, without further ado, let's get into this. But first, if you're new here, consider subscribing to this channel to continue receiving great weekly videos like this. Don't forget to hit that notification bell so that you can get informed every time I publish a new video. Bitcoin fell below $30,000. According to a report published by USA Today on June 22nd of this year, the largest cryptocurrency in the world dropped more than 10% to trade, as low as $29,154.37 at one point. At that time, it lost more than 50% of its value since hitting a record high in April of this year. You might also want to note that the report suggests that this digital currency surged more than 300% between January and April of this year. And at the same time, other cryptocurrencies also dropped. For example, the second largest cryptocurrency in the world, Ethereum, also lost more than 5% of its value. Smaller coins like Dogecoin also dropped in value. At one point, Dogecoin tumbled more than 25%. With that being said, let's discuss why are the cryptos falling. Bitcoin reached a value of more than $64,000 in April of this year. However, this cryptocurrency is now struggling to reclaim its all-time highs since then following a series of events. Now, there were two major reasons why the values of cryptocurrencies dropped. The first one was a tweet by Tesla CEO Elon Musk. He tweeted on May 13 of this year, and I quote, "Tesla has suspended vehicle purchasing using Bitcoin. We are concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels and we believe it has a promising future, but this cannot come at a great cost to the environment." And secondly, there was China's crackdown against cryptocurrencies. Back in May of this year, Elon Musk announced that his company, Tesla Motors, will no longer accept Bitcoin as a payment method. He also said that his company is selling off his Bitcoin holdings. Elon Musk said that Bitcoin mining is impacting the environment and he will not support Bitcoin unless we find a more efficient way to mine Bitcoin. Here, it is however worth mentioning that Elon Musk's tweets have been impacting the prices of various cryptocurrencies and stocks. For example, when one of his tweets indicated that he has invested in Dogecoin, the price of Dogecoin increased. So the main concern is Bitcoin's impact on fossil fuels. Now you might be thinking about why the prices of other cryptocurrencies fell. Well, let me tell you that altcoins tend to follow Bitcoin. This means that if the price of Bitcoin decreases, the values of the other cryptocurrencies also decrease. For those who don't know, altcoins are all cryptocurrencies that were created after Bitcoin. Then in June of this year, the value of Bitcoin further dropped amid concerns of its use in the colonial pipeline ransomware attack. Then the value of Bitcoin increased to $40,000. However, it fell again after China's central bank deepened the crackdown on cryptocurrencies. Let me tell you that the Central Bank of China stated that it had ordered some banks as well as some payment firms such as China Construction Bank and Alipay to crack down further on crypto trading. You might also want to note that the country ordered Bitcoin mining in its Sichuan province to shut down entirely. And according to a report published by the Motley Fool on June 26 of this year, the IRS revealed that it was getting more stringent about collecting taxes on cryptocurrencies, which may have contributed to the crypto crash as well. You also need to understand that cryptocurrencies are also volatile. They are highly speculative and several investors are still on the fence about these digital currencies. Nobody is sure whether these currencies will still exist in a few decades. When the prices of cryptocurrencies drop, nervous investors tend to panic sell. This causes the prices of cryptocurrencies to drop even more. Reports suggest that Bitcoin miners in China are dumping GPUs. This means that some of the decommissioned Chinese mining capacity will not return. A senior editor at Hong Kong-based crypto exchange called OKEX, Adam James, said Chinese Bitcoin and Ethereum miners dumping GPUs does not come as a surprise, given the fact that China seriously cracked down on Bitcoin mining in the country, but the development may be interpreted as fundamentally bearish nonetheless. He also said that the market sentiment has decreased significantly. China has even started blocking access to major crypto exchanges. You might also want to note that China accounts for around 65% of the total Bitcoin mining in the world. So it makes sense that the value of Bitcoin drops significantly when its mining is banned in the country. While the impact of Bitcoin mining on the environment seems to be the biggest factor here, reports also indicate that the wild price moves of Bitcoin are a threat to the economic and financial stability of China. According to the Chinese government, cryptos disrupt economic order. Various reports also indicate that Binance has been battling a global regulatory clampdown. The United States, as well as countries throughout Europe, have ramped up their scrutiny of the crypto exchange. Here it is more important to note that Binance is the largest crypto exchange in the world. The hash rate of Bitcoin dropped to a 13-month low in July of this year, after China's crackdown. Moreover, the hash rate of Ethereum has also dropped 20% following China's crypto mining ban. For those of you who don't know, hash rate is a measure of how much computing power is being directed at the network of a cryptocurrency. All that being said, what will happen next? Reports suggest that cryptocurrencies could be poised for further declines based on a closely watched indicator. According to a senior market analyst at a foreign exchange trading service named OANDA, Edward Moya, long-term Bitcoin bulls are getting nervous as a break of $30,000 could see a tremendous amount of momentum selling. Many traders have waited for one more push lower, which could see crypto traders wait for a plunge towards the 20,000 to a 25,000 area. Moreover, JP Morgan strategist Nicolas Panigerzoglou stated in a report, "There is little doubt that the boom and bust dynamics of the past weeks represent a setback to the institutional adoption of crypto markets, and in particular, Bitcoin and Ethereum. If you're a beginner, I would highly suggest that you proceed with caution. Piling all your nest eggs into something as volatile as cryptocurrencies poses major risks to your retirement. Should you be worried? Another important factor we need to discuss is that whether you should be worried about the future of cryptocurrencies or not, I would say that this recent crash is nothing new for cryptocurrencies, and these digital currencies are here to stay. What you need to understand is that you should be careful with your money. Smart planning and an adequate understanding of how cryptocurrencies work can help you avoid losing your money. Let me tell you that Bitcoin has lost more than 80% of its value on several occasions. Well, it has always bounced back, and it will bounce back again soon. Moreover, Ethereum lost approximately 95% of its value back in the year 2018, and it still recovered to become the second largest cryptocurrency in the world. Yes, I agree that the past performance of a cryptocurrency does not predict the future of that crypto. However, history shows that big cryptos like BTC and ETH have been able to withstand volatility. And although this does not guarantee that those cryptocurrencies will completely recover, it still indicates that these cryptocurrencies have seen worse and were able to survive. The key to becoming rich is to hold your investments for the long term. If you truly think that the crypto industry has a bright future, you should be willing to hold on to your investments for the long term. Lastly, you need to understand that every single cryptocurrency out there is extremely volatile. According to a report published by Fortune.com on June 23rd of this year, the daily price volatility for Bitcoin over the past 3 years is 75%. In comparison, the S&P 500 daily volatility over the past 3 years has been 22%. This indicates that Bitcoin has been nearly 4 times as volatile as the stock market. And the report published by the Wall Street Journal suggests that there is 3 times the amount of margin depth in crypto as compared to the stock market. And when margin calls hit in crypto, many of those positions are immediately liquidated, which can create a cascade of selling. That's all for today's video, and thank you for watching it. If you liked it, make sure you give it a thumbs up and share it with your friends. Also, don't forget to share your thoughts and valuable feedback with us in the comment section below. Lastly, if you have not already subscribed to this channel, subscribe to it and press that bell button so you will be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these 2 videos that are appearing on your screen. We will see you there. Take care and stay tuned.